All right, what's going on, guys? Welcome to the second part of Swing It, the new strategy. If this is the first time you're actually going into this video, I recommend you going back to see the part one, since this is the part two of the Swing It strategy. Okay, for swing traders. All right. So, all right, as I was explaining on the previous video, I mentioned that I made my entry right here when the market was touching the 600 simple moving average, right? Make my entry right there, stop loss below. And the take profit, you can go 1 to 2 if you wish. Or if you decide that you see now the market climbing on top of the 80 EMA line, you can just, swing this thing, all right? You can just get scared as soon as you start seeing like very big momentum to the downside or trying to break below. Like most likely here, you could have got scared, right? You could actually close it. So that would have been pretty much that distance right there, about 1,312 pips. Okay. For how long you would have it open? About 2 months, 63 days. Okay. So, yeah, something to think about. I know, like, if you guys are into scalping, I mean, come on. You can do this. You can find this when the market crashes. Okay, you make your buy. Let's say you want to enter with a 0.05 right here because you want to hold it. So you enter with a 0.05. Just a just a small entry right here on Nasdaq. It's a lot of money right there. This is a lot of money right here. Just to that distance right here. At 1,312, this is a lot of money. Definitely a lot of money. So okay, you make your buy right there, and you decide to leave it open. Once the market break and pushes up very strong, I recommend you if you are halfway up, you can secure profits right here, some profits right there, and move the stop loss to break even. That's something for sure. You need to move your stop loss to break even. Let's say now the second take profit, you don't want to put it here. You actually want to let it go. You want to let it run all the way to the top. Meanwhile, remember, the price is on top of the 80 EMA. You know this is a strong trend and the market will continue pushing. So you can hold this thing for several months. Okay, 1 month, 2 months, how many months as you want. Now, you can even hold it for the entire trend. When would you get out? Remember, I'm on a 4-hour time frame. Okay, I'm only going to be looking at a 4-hour time frame when it comes to this swing strategy. Now, this is why I love RSI. I always tell you this. RSI is a good indicator that will show you also when a trend might be weakening. It's actually getting weak, and it's going to now start reversing, or it's going to fall, or it's going to make a correction. So look at all this trend. The price was pushing up very strong. And when do you see that now the market starts showing? As soon as the market starts showing a divergence, the RSI you see right here, right here. Look at those zones, right here and right here, right? Market is creating higher highs, and right here is creating higher lows. Okay, so that's the divergence right there. The trend, it was telling you, man, I'm going to fall. There you go. You have that drop. Now, what do you see again on that drop? Look at the RSI at the bottom. It's giving you the divergence again. So it's telling you, man, I'm about to push up now. So you see the divergence. Do you see the divergence from even from this point to this point right here? Okay. So you see price creating lower lows, and right here is creating now higher lows. Okay. So you go. You have another divergence. You wait for perhaps a double top. I'm sorry, a double bottom, or the first higher low, because right now it's creating lower lows, and the first higher low right here in this zone, or if you spot a flag, okay, we are below. Look at the 600 line, right? Let me start removing lines right here. So we are touching, we came back down. I want you to know and understand also price action. So you need to know that, okay, this is a nice support right there, because it touched it for the second time. So it reached the bottom and pushed up. Could be a pullback, so be careful. Don't enter right here because the market could just be doing a pullback. You see, there's no, right now it's just a single massive drop. So don't enter right here. Okay, you wait. You need to wait for the pullback. It looks tempting, but no, right? And I will tell you why. Again, look at price action, guys. Look at price action. Let's say from here, the price is dropping, doing a pullback, push, pullback. You see that all these pullbacks never breaks this previous high. It never breaks this previous high. So it's creating higher lows. And right here at the bottom is creating lower lows every time. So right now you see this big push, right? It created a lower than this one. So now the price pushes up again. So it's a pullback, right? It's another higher low. There's no sign in here yet to actually buy. So price comes back down, creating that double bottom. Okay. So normally right here in this zone, that's why I highlighted this entire zone. We're going to find something that's going to tell us buy. Okay. So this was a nice zone to buy. This after you see this double bottom, you know that the price is very, very cheap right now. Very cheap on a 4 hour time frame. So because we are kind of like below the 100, and now all you need to do is wait for an engulfing candle, which is one of my rules that I have written in there. This nice engulfing candle. So your entry would have been there, right? Your actual entry would have been in this position. Stop loss below the zone. You know it did a double bottom. Now you have that momentum to the upside, okay? You see, and even right here, you can say this is, let me remove this circle now. Right here, you see three candles consecutive, one after another. If you have seen my videos about um, supply and demand zone, this is a big ass demand zone right there. So the market pushed up right here. It never came back down. But look, the price started to push up. We're going to go for a 1 to 2, as I mentioned. 1 to 2 risk to reward. Now, once you see the market reaching the middle line, right, halfway up, you need to put the stop loss to break even. You need to secure some profits halfway up. Okay. If you don't want to close it like in your 1 to 2 risk to reward, you know you are climbing on top now. It's very strong. This support right now, the 600 is acting as a support right now, and also you have the 80. So price is dropping. It's kind of like consolidating, but you still know that the market is right here on top. Right here, let's see, almost. You could have perhaps almost got stopped out on break even on the second entry you did. But still, look at that. You never got stopped out. Your entry was really nice right there. And your take profit, as I mentioned, as long as the market is on top of this zone, and you know, guys, you know that right now the market is cheap. The market did the correction. Now the market is creating new highs. This is key. This is key, guys. Drop again. I'm going to draw it again. You got the pullback. Price is creating lower lows every time. Now you got the first signal, which is a reversal, right? Uh, the end of a trend is right here. You're seeing now the divergence. Okay, this is, oh my God, this is so beautiful right now. There's so many confluences right here. So you got the double bottom, you got the divergence. Now the price starts pushing and creates the first high. Okay, as soon as the market creates the first high, now it starts consolidating. It's like slowly going up, right? Pushing up. You see the price is creating now new higher lows, new higher lows and higher highs all the way to the top. Now right here, it kind of like it dips, is scared to scare people out. It comes back again to retest this 600 line, creating a lower low than this one and then this one, and now pushes back up again, very strong, but still is failing to continue creating new high. So most likely right here, it could have scared a lot of people right here and scare people out. But you know that the correction, you see that drop already happened. So market at some point will start correcting and will start actually pushing up. Okay, I want you to understand that, guys, that Nasdaq, once it's very drop, once it reaches the 600, the market is very cheap and it's going to be looking to push up. If this thing continues down, like how many times you have seen this thing actually falling very far away from the 600? How many times? Right here. How many times? This one, coronavirus. So unless something as big as the coronavirus, unless another pandemic comes out, this thing might drop very, very low. Like it may go to hell, basically. But as we are not having that, we're just having some crashes right here. Okay, That was a nice crash right here, big corrections, right? So market is very cheap right now when it reaches the 600. I want you to understand that on a 4 hour, when the market reaches the 600 line, is very cheap. So the market will try to correct back up. Okay, so that is basically what I'm trying to do. That's basically what I'm trying to show you. So right here, where would have where actually would have made the entry? Okay, you make that entry on on that engulfing candle. Let's say you missed that. You didn't get in on that one. Okay, you see this high? You see the first high? It broke this previous high, created that first high. So all right, you can go there, you know. And the stop loss here, I know this is going to be very far away. Yes, I know this is swing trading. This is the risk about trading. But look at the 1 to 2 risk to reward, how much you will be getting there. Okay, how long would that take? Again, from your entry point all the way here. So it's about 37 days. Okay, it's a bit over a month. It's not that far away. 1,193 pips. Nice, right there. And meanwhile, you're here, guys. I mean, come on, look, just look at this. This this just can't be more perfect. I mean, and this is just following that, right? Now, can you imagine? Okay, you have to follow your price action. You know, this is a nice support zone right there. Now, all right, I am spotting a flag, okay, without never forgetting about our formations. Okay, never forget about your formations. So you got your flag formation right there. You got the breakout. Okay, this is another entry point right here. This is beautiful. You see that one single candle breaking, stop loss below the zone, take profit, okay, 1 to 2. So you have another 1 to 2 entry right there. So you see you're making more entries as the market is pushing up. Now you see the market is on top of the 80 EMA line. So this is a killer. This is definitely a killer. So this is massive, guys. What I'm showing you right here is something for you to actually make ton of money. Even if you have a small account, I'm gonna tell you this. If you have a small account, you don't have time to be trading all the time. Good. Don't trade all the time. Catch these movements. Wait for this. How can you wait? All right, where the market is right now. The market right now, is this is the previous record highs. Previous rec, what the heck? Okay, so previous record highs right there. Okay, set some alerts. Set some alerts. As simple as that. You set some alerts whenever the market is about to crash like that. Let's see how far it can go. Okay, you can actually make um, enter your alerts and just get ready, right? Once the market reaches those zones, you're going to be ready. Okay. The deeper it goes, the better because the reward is going to be huge. It's going to be enormous. So it's swing trading. If you are into scalping, you can find your entries right here. Again, this was a beautiful formation. It was a few days ago. Nasdaq, I'm still holding this buy. I'm still holding this buy. I enter somewhere around on the breakout on the flag, right here, somewhere around that area. So I'm still holding. I'm still holding. I decided to actually I closed the US 30 and S&P 500, but I am still holding this one. So I'm about 1,257 pips on top. I'm not going to close it. I know the market will most likely try to reach this zone. I really doubt. Of course, I'm on break even. I don't care if this shit goes down and is stopping out on break even. I don't care. This thing right now, I doubt it. I strongly doubt it that the market will drop this low and stop me out right here on break even. I really doubt it. I don't believe it's going to happen. If it happens, it happens. Good, but you bet I'm going to find another nice, beautiful buy here again. And that's what the market is about. The market will be very overbought, very far away from the 600 line, very expensive. It will give you your sign. You see, oh my God, this is I don't know how this is crazy. You see how far is the market? Very expensive, very far from the 600. Look at the RSI; is already giving you that divergence right there. That RSI already knew this thing was actually going to drop and reach the 600. Now, what are you seeing here? Another divergence. That's the first divergence after being very overbought. So what do you think the market is going to do? Most likely is going to continue crashing, to be honest. Next week, it's most likely after seeing the divergence on the RSI, I'm sure the market will reach at least this zone. I'm not going to close my entry yet. I'm just going to let it open. I'm going to let it run most likely until, I don't know, January. Or if I start seeing another drop, the market reaches this zone, I might be looking for another buy. So right here, where would be your entry if the market reached the 600? Multiple entries you could have done here, as I mentioned. Not just this. I'm not paying attention just to here, just to these indicators. I'm paying attention to my flags as well. If I want to go on a 1 hour or 15 minute with the TP strategy, I can still find other type of entries. So right now, right here, you already know this. You see this big push right here, big momentum to the upside. This is an entire demand zone. Okay, so all right, I knew this is a very powerful zone. You could have entered either on the pullback, like on the flag, you see that nice bullish engulfing candle, or let's say you were into just the price action, right? Price action, the market was melting. I started to do a little consolidation to the downside like that. That every time was creating lower lows, right, and higher lows. So it did a push. Now right here, you see it created the first higher low. Okay, this is the lowest low point. The first higher low is already telling you I'm going to shoot up. So let's say you actually wanted to enter in this candle. You see this candle closed on top of this one. So this is the first sign that the market wants to push up. Okay. Let's say you wanted to get in there, right? No problem. That's a good entry. The only thing is the stop loss is going to be a little far away, but still, you can go to your 122. It's fine, right? And then let's say, I don't know, you made that entry and you forget about that entry. Now, another day, you're just going to go, you go to your, whatever you do, scalping, you go to 1 hour, 15, and you try to trade the TP strategy. So now you see the price pushes up, comes back down. Don't forget about the nice, you know, try to use everything in combination. Don't forget about this nice demand zone right here. So price came back down, give you that engulfing, or you waited for the breakout. Remember, this is a nice flag right here. This is a nice, nice flag. So right there, the price broke. You see that breakout right there. So you could have actually made another buy right there. Stop loss below the zone. There's no way you could lose this one. Let's go you 1 to 2 as well. Or let's say you don't want to do 1 to 2. Let's say you want to reach to previous levels. You can do that. Okay, I always recommend that. You can reach previous record highs. You know that that correction might be ending because what it created the first. Where's the thing? Here. It created the first higher low. You see this. This is the first higher low. This is the second higher low. You see the market is already changing. The market was creating lower lows. The moment it creates the first higher low, second higher low, you know this thing wants to go up. And you know it's Nasdaq. That's why you don't do this in pairs. Okay, please be careful. I have not tested this in pairs. Plus, you're seeing the divergence on a 4 hour. You're saying, man, this downtrend is about to end because now I am seeing that divergence. The same thing happens here on top. It was telling me that a drop was going to be coming. Now I'm seeing a correction. Now I'm seeing the divergence here on the opposite side that is telling me, man, this drop right now might actually be ending now. So, so many opportunities to do this, guys. Again, this is the second part. I will be doing more parts of this. I want you guys to leave your comments below. Let me know what you think about this strategy. It's a killer, as I mentioned. Just look at this. Every time the market reaches this point, these are beautiful entries for swing trading. Not all the time you're gonna be trading this, because not all the time the market is. As you can see, you can have 3 times or 3 months very expensive and then it drops. So 2 months very expensive and then it drops. Then I don't know, another 3 months very expensive and then it drops. So it's not all the time, but you can take advantage of those drops. Okay. I'll see you guys in the next part. See if I can post this video tomorrow. Let me know in the comment section what you think about this. Don't forget to like, comment, share. I'll see you guys tomorrow. Take it easy, guys.